Tuesday, June 4th, 2019, Maneco 64, home of alternative economics and contrarian views. So Billy is back. Second video today. I usually don't do two videos, but there's quite a bit out there in terms of news. Before I start, I wanted to say that Billy realizes one of the most important rules of economics, and that's that there's no such thing as a free bone. Right, Billy? So Billy has to earn his keep in the house, and that's why he works in these videos. Anyway, I want to talk about hedge funds and how one of the biggest or most famous UK hedge fund managers is being caught with his pants down, so to speak. It's the analogy of when things are not great. And the tide goes out. A lot of people, get caught. You can see who's naked or not. And that's the case of Neil Woodford from Woodford Investment Management. And that's a hedge fund. And before I go into the story, and this is pretty worrying because you have local councils or, local governments from counties and other how can I say, public institutions investing in hedge funds. So yeah, hedge funds are, the name is a bit misleading because they're not really hedged, I would say, because if they were fully hedged, they wouldn't make any money. So if anything, they're highly leveraged and they're very risky, in my opinion. And I go back, I'll go back to the late 80s, early 90s. I think that's when we started seeing these kind of businesses evolve, hedge funds. I remember well, people trying to pitch hedge funds at that time, very risky. And I remember as well from personal experience working in the city at ABN AMRO Bank. After City Futures, I worked there as a futures broker. After City Futures, which was a part of Citibank, when they sold out the business and our department, City Futures, was taken over by ABN AMRO Bank, I was in contact with a former trader from Salomon Brothers in London, and he wanted to start up a hedge fund, and I think he did start up a hedge fund, and he wanted to open an account, an execution account with ABN AMRO to deal through me in the markets. But I have to say the compliance at the time of ABN AMRO Futures said no to hedge funds. And that wasn't even having their accounts, clearing their account, because the difference is when you clear a hedge fund's business, you actually hold that account and they have to put the money with you. But all this guy that I knew wanted to do was execute the trades with me, give me the commission, and then I'd have to give up the trades to his prime broker who had his account. But not even that ABN AMRO Bank or ABN AMRO Futures would allow. And that was back in 1997. Nowadays, hedge funds have become almost like, normal. And there's no, I would say, skepticism. So this happened yesterday, I think. Yeah, it was yesterday, the news. I didn't cover it because it came out during the day. My videos usually come out in the morning. So this is from the FT. It says, Neil Woodford slams the gate in investors' faces. Withdrawals bar could signal the end of the UK's highest profile fund manager. So this guy just basically closed the bank. Investors want to take their money out and it's frozen. And the thing about hedge funds, a lot of these guys or girls that start hedge funds, they're usually traders at banks, or they're like fund managers at a mutual fund. And then, the incentive is huge because the pay structure for hedge fund managers is quite, how can I say, enticing. They have usually a 1% management fee, and then they take usually 20% of the profits if they have a profitable year. Let's say the fund is up 10%. They will take 2% out of that, and the investor will take 8%. And that's not including though the 1% management fee. The management fees could be lower. It could be 0.5%. I'm not sure, but there is a management fee. And when you're talking billions, it adds up. So, and why would people put billions with fund managers or hedge fund managers? Well, because if they build a pretty good track record in their previous positions, a lot of people will come and put money with them. There's a lot of money out there. It is a credit bubble. So let's read a little bit about this Woodford investment management, or Neil Woodford, and what really happened. And the fact that there was a run on this hedge fund, and they had to close it. They won't allow you to take your money out at right now. So you could have millions in there, and the money is really gone. So it's a run on the hedge funds. So let's read this article and see what really happened here. This is from the FT, and I quote this. It says, "The fate of one of Britain's best-known fund managers lay in the hands of a group of local government officials and retired council workers in the county town of Maidstone in Kent, not far away from where I am. On Friday morning, last week, members of the Kent County Council Pension Fund Committee met at the Grade 2 listed Sessions House to discuss the scheme's investment portfolio. On the agenda was the future of a $263 million investment mandate entrusted to Neil Woodford's investment business." That's the other thing, putting pension money into a hedge fund, I think, is a really bad idea. But why is it happening, though? Why does Kent County Council and the town of Maidstone feel that it's necessary to do that? Well, because normal government bond investments, safe assets, are not returning anything. You get less than 1% for the 10-year gilts. Cost of living is going up by 5%. So you have to risk it, put it with a hedge fund, which is not really a hedge fund. So that's the first problem there. And it goes on to say the pension fund had worked with Mr. Woodford since 2007, but had seen its investment in his £3.7 billion equity income fund suffer in recent years. Last November, the committee had invited Mr. Woodford in to explain his outlook and views on Brexit. But 4 months later, its performance remained disappointing, and the investment committee put the mandates under review. It says it's a $3.7 billion equity income fund. So if he's getting 1% of that, just management fee, he's making £37 million a year. I wonder if he's going to freeze his management fee. I'm not too sure, but someone would have to ask him. So it goes on to say, on Friday, in response to the scale of the equity income fund's fall in May, first reported by the FT, it decided it had had enough and wanted to end the relationship. Kent Pension Fund said on Tuesday it had not been given warning of the redemption gate before the decision was made public. KCC is disappointed that as a major investor in the fund, we did not receive this prior notification, the pension fund said. The decision triggered a series of events that could signal the end of Mr. Woodford, who made his name at Invesco. He became one of the most successful and well-followed investment managers before setting up his own business in 2014. So why did he need to set up his own business? Well, you know, the the enticement of that 1% management fee. You know, I was reading that this fund was as big as 10 billion. So if you got a 10 billion fund, you're getting a 1% management fee. That's 100 million. Or even if it's 0.5%, it's 15 million. So you don't really care. He doesn't really care eventually, you know, if everything closes down, because he's got his money out. He's got his millions out, and it's probably all offshore as well. These hedge funds are all domiciled offshore, even though he's based in the UK. So let's keep going here. On hearing that up to 7% of the equity income fund was being withdrawn, Mr. Woodford and his fellow executives decided to suspend trading in the fund on Monday, blocking further investor withdrawals until further notice. Such measures are extreme by fund managers, and the reputational damage can be serious and long-lasting. Last year, GAM, the Swiss fund manager, threw up redemption gates. They call them redemption gates. It's a euphemism for saying, you know, whoa, we lost all your money. We can't get out. You know, we risk too much. We leverage too much. And we can't get your money back, on a series of absolute return bond funds, which it was later forced to close as investors demanded their money back. Several UK property funds made similar moves following the Brexit referendum 3 years ago. So there you go. This could be just the you know, how do you say, what's the expression? The tip of the iceberg. There could be dozens of others in the same position, and you kind of wonder, you know, Maidstone in Kent is not a huge place. It's not the wealthiest town in the UK or city in the UK. There's a lot wealthier places in the UK, and you wonder how much of this, you know, pension money is at risk, how much they have put their, you know, a lot of the money with hedge funds, which really they shouldn't. But it's just a symptom of the fact that central bankers have manipulated interest rates too low. And the only way for pension funds to get some kind of return is to risk it in funds like Mr. Woodford's fund. So there you have it. Let's keep an eye on on this story, and it could evolve into other you know, disasters. And we haven't even really had a major market upheaval, and this fund has bitten the dust. So you can imagine when things start getting really, how can I say, volatile and disorderly. You have to understand, you know, a lot of these hedge funds, I read a little bit earlier as well, another story about the Woodford investment management. They invested in a lot of illiquid assets. And illiquid assets, when the markets are under pressure or there's a lot of volatility, you can't get rid of those assets. It means they're not liquid and you won't find a price. So it's a mess. So yeah, it looks like Neil Woodford has been caught with his pants down while the tide was, you know, coming out of the beach. I'm sure there will be a lot more fund managers who will be caught naked. And I feel sorry for these pension funds. You know, well, the people who hold the policies, but the people who run these pension funds, they need to understand that hedge funds are risky, and but at the same time, they don't have a choice because they have to provide some kind of return to the retirees, the people who are retired, who are expecting this income. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you a great rest of the day. Take care. Bye. Say goodbye, Billy. Bye.